Hello, hello. Good morning. Welcome to another year's futures trading stream. This is Victor here, streaming from Atlanta. Today is Wednesday, 11/8, the 8th. It is 8:41 Eastern Time. Today I will be joining a webinar of Jim Dalton at 9 a.m. He does that. He does this free webinars because he's having some online courses that he's selling. But the value of these free webinars is really good. It has some value. I'm just letting you know that you don't have to register. I don't have any association with him. I was his mentee. He was my mentor. I guess I won't be here if it wasn't for him. That's what I always talk about him. Let's take a look at what the market is doing now, or where the market is at. We got let me pull this chart. The bond market, I think the bond market is not has lost its lackluster. The market may be fixated now in crude, what crude does. If it's supposed to open with a gap, the crude is supposed to open with a gap to the downside. If this market doesn't recover, it kind of favors the view, the pessimistic view of the market, because if demand decreases, also seasonality, right? We're getting into winter time. But I don't like this low, how this low has been. The fact it has a gap here, it would be really nice if we have a breakout here to the downside without this gap. And take a look at this. look at these lows here. You got 1, 2, 3, 4 lows buying from the 67 level, something like that. The dollar and gold are rebalancing here, trading in range. I guess this is the market we have to keep an eye on. Regarding my market, I trade the ES, nothing else. I have here notice how many days we are. I guess the first week. This is the second week. This month have 5 weeks. The second week the market has almost reached this high here. If the market takes this high, this is the monthly, take this high out, that would be the end of one time frame low in the monthly. And the monthly is always the last one that reflects change. It's the last one to reflect change. This level here, the 44.23, is something to observe in this time frame. What happens if the market doesn't take this one, for example, right? And after, and look at what we have here. If there's more sideways trading here, this could be an inside bar. We are just 2 weeks, 3 more weeks to go. Not even 2 weeks. The weekly, we have a significant rejection. Market traded inside this range and was rejected. The rejection was a strong rejection here, but it didn't happen right away. It would be nice, for example, you have an excess here, and this bar starts somewhere up here, for example, or maybe above this range, or maybe up here. That would be better from my point of view. Now, this high, again, in the weekly time frame, we have a non-excess high here. And if I check the number, just what number do I find here? Look at this. Look at this high, right? This is the high and low for the bar. This case. What's the high? 44.23. The same as this one. And now here in this time frame, in this chart, is a high that has no excess. In this time frame, in this chart, this is good, right? It has good excess. Here it doesn't have excess. Now we are up here, coming back towards this level, and the market has no excess here. Interesting, right? The low, however, this is information that I'm carrying on, okay? For the future, it doesn't have to be important now. But the low is as bad as this one. No? It may have excess here, but it has no excess. Look at how many lows do we have here. 1, 2, 3, and 4 lows here. Okay, so this low here is kind of misleading here. Okay, that's information, to carry on. Now, the daily. Okay, interesting things happening here. The 50, the market is trading back. I mean, just take a look where the market was sold from when the market printed this inside day 2 days ago. After the market gave us a 2-day range here, where it was sold from the 50, right? The next thing to monitor to the upper side, which makes this high weak. Now the low was also where it's coming from the 200. It's right there. No? Did you see that? Did you notice that? It's right there. This is not good. Okay, exactness kills here. It's just an indication who is behind, who is conducting the trade here. Very emotional rally here. Very emotional rally. 1, 2, 3 gaps, back-to-back gaps here. The XX looks better in the daily. Do good X's here. This level here, again, take a look at what's up. What does this number here? H is high, L for low, right? 44.23. You have 7, you have 20, 23. You want to have an exact number. It's 23, but I can call it the 44.20 area here. This is terrible high here. There's no excess here. You got 1, 2, 3, 4, 5 highs at the same level. I consider this. You can consider this one too as well if you want, but at least 5 highs. This is 5 highs. This is very weak level here. So the market has good also taking this one. Historically, when I have seen this kind of levels here, when I have seen this kind of levels here, that is also a reference. There's a reference in multiple time frames. It's monthly, weekly, daily. The odds of continuation are high. Notice what we have in the top, a gap. There's nothing there that can hold or prevent or offer some resistance to any kind of rally here. Any kind of buying pressure here. What do we have above? This is, I don't know what happened here, but this. I don't want to guess, but if I were going to guess, this looks like it's a skinny day. I will check that on the daily market profile chart. All right. So I have a weak rally here as a consequence of this unbelievable break here, which was very weak as well, coming from this range, right? Leaving multiple highs there. Now, I go to the market profile. Did you remember what you have seen? What happens in one time frame? That's what people traders call markets are refractory. Did you see this high, right? one, two, three, four highs. The market just takes the one high a little bit, takes all these highs. When the market takes too much time to take one reference, usually, the damage they can do to the upside is limited. That's one thing, right? What happened yesterday in the intraday is something similar, right? We have 1, 2, 3, 4, 5. Then M comes, takes these highs out. Technically this is a good high, and then it liquidates that. It just took too much time to take these highs. Right? Usually, if we have this kind of highs down here, somewhere down here, the odds of a late spike increases. But right now, after all this rally, after all this emotional rally that we have here, the odds, you can see the market is weakening here. It took the highs up and then boom, break. Also, we have the 4400, which is a reference that traders see a lot. Doesn't have anything. It's just because they have 2 zeros on the back. Right? Just a century number, and traders tend to pay a lot of attention to those things. All right, what else? The low of this, today we have a good excess here. Coming from the inside, we have this inside day, non-excess in the lower side. The action to the downside has not been completed. This is poor, this is weak. You have a gap, skinny profile, gap high. This could be weak coming. This is weak as well. This is non-excess. This is weak coming from hardback and no excess at the low. The structure of this rally is super weak. Got to be very careful. But the thing is, many times we want to up from the market. The market is bad. The market is going to break. I'm going to be short. Okay, just wait. Let's wait. Let's wait for the market to show its hand. Sometimes it's better to be a little bit late and too early. What happened here this day, if you see the time frame, if you trade the daily time frame, you can see that is what happened yesterday. Yesterday we had a weak opening, and the closing was weak as well. It contrasted, right? The closing contrasted with yesterday. Yesterday closing, the day before yesterday, the closing was, you have a strong closing here. Value is higher. We have an upside breakout of this 2-day range. The market is coming back to check, at least 2 times has come back to check this range, right? I don't think a strong market would do that, but what is preventing, what I think here, I try to be as neutral as possible, right? But something that is, I guess, affecting, the market dynamics here is the 4400 and what we have up here. And on top of that, excuse me a second. On top of these highs, there's a gap here. So there's nothing here, monthly, weekly, daily, time frame, reference, all them weak. The monthly, multiple time frames, right? And the daily and the intraday are weak. The weekly, daily, and intraday are weak. Reference here. This is a super exponentially weak high. Notice where the overnight has been bought from, hard back. You can call it also the 50 moving average, but and the 4400 is right there. Inside day, overnight inventory is short, mostly short here. A contraction would be a rally here at the opening, right? Yesterday we didn't have a rally. Yesterday the market tried to go in the direction of the overnight session. It failed. Now, I am trying to remain as neutral as possible here. The oil market is about to close the gap. It has opened yet, but it is pretty close to close the gap. See, I don't know how if it's going to do it, but I think I can see the 100, the 100 right there as well. Never mind. That's not my mark. All right. I'm going to be attending. I don't have. I won't be all the way through the opening today. Um, there's a breakout here, right? This is an inside bear, a breakout. All the breakouts in the intraday have been failing, right? Here, yesterday, before yesterday, whenever the market gave us inside bars, the breakout failed. Now, what is going to happen in the daily, I don't know, but I am just trying to be aware. The dominant force is in this market. This is very short-time traders are in control of the market. Inventory. Oh, something very important as well. Look at this volume, brother. Look at this, brothers and sisters. This is a sign that this movement is short covering rather than a more potent and more healthy combination of short covering plus new buying. Notice how much the volume has decreased in these 2 days. You know, we have really high volume previous days, and boom, it just dies here. All right, it just dies here. And the lower the volume, if the higher the market goes, and the lower the volume, the riskier it becomes. All these things, this is very important as well. It's just a sign, you know, just be careful there. And the VIX also, boy, the VIX is so low now. Let's see. I want to join. All right. All right.
Welcome to the webinar. Please stand by. The webinar will begin shortly. Please remain on the line.
Okay, the webinar is about to start. I wanted to check here or what other markets are doing. I want to check really quick what's happening. This is the ES, right? Oh, something else here. Just check this out. Yeah, this is the current contract. Okay, this is incredible here. Something that I look at this really nice trending line here. This is the current contract. You know, this could be, this could easily be. You know, you got this trend line fits a breakout. Fits a breakout. We can have
The webinar will begin shortly.
Oh, come on.
Please remain on the line.
Come on, mute this thing. I need to mute this thing. All right. This could have a breakout. I am always trying to think of a scenarios here. Now this can have a breakout that will take the trend line. You can take a trend line out, close this gap, and then just break afterwards. You know, that's something that I'm gonna point out. I just noticed this yesterday when I was doing my homework. It's just too perfect here. Right? Notice also what is happening here at these lows, right? This is a classic sign of late stages, right? Late stages of a market. You know, this is nice. Look at what happened here, right? I am not saying this is going to happen again, but notice how overextend this is very technical trading here, and the same thing is happening here again. You can see for the formation here started to form right away. It's just too perfect here. Okay, so be careful here. Oh, what I was going to say before I close, I wanted to check what's going on with the other markets. Oh, what happened? Oh, purple. All right, that's Nasdaq. Oh no, this is a range in the weekly, trending lower as well. Wow, how different these markets are. Okay, this is an unbelievable, unbelievable rally here. Short colored rally here. Very, very volatile. What's happening here? This is the Dow. It has better odds. Kind of like it seems like the ES. Bigs. All right. Oh, all right. This webinar start. I wish you guys good luck today. Stay safe. See you later.
Welcome to the webinar. You have entered as an attendee in listen-only mode.
Our courses, and the next live course that we have is the
All right.
market